here we have the 6 steps to a merger model. The first step is going to be your assumptions. This is going to be your price, your consideration, which can either be your debt, equity, cash, or a mix of all three, and also any additional assumptions like your transaction method or transaction fees, sorry, or your financing fees. Step two is going to be purchase price accounting. And let's just say I buy a cardboard box for 150 bucks, but it's really worth $100, but we need something to plug that $50. Now, usually that's known as goodwill, but that also might be asset write-ups or anything of that nature. And that kind of takes us into step three, which is your pro forma balance sheet. Now, here you want to include anything that you adjusted for in that purchase price accounting. And what you also want to include in this is anything to do with the purchase or consideration for the company, right? Whether you use cash or debt, that needs to be reflected here in the balance sheet. Now, that takes you to step four, which is the pro forma income statement. Now, here's where you want to make sure you take into account revenue synergies. You want to disclaim if you're not using or taking into account net operating working capital or any effects of DTAs or DTLs, deferred tax liability and deferred tax assets. You also want to take into account any foregone interest on cash if you're using cash as a consideration, or you want to take into account interest expense if you're using debt as a consideration. And you also want to take into account any depreciation and amortization expenses you have from the beginning based on those asset write-ups, right? Now, this takes us to step five, which is applying the buyer's tax rate to that pre-tax income. In the step six, which is finding your net income and then dividing it by your total shares outstanding, assuming that if it's a stock purchase, it's a fixed exchange, like 1-to-1 for stock, and getting your net income. And with that net income, you can determine whether the deal was accretive or dilutive.